5 months after COVID-19 induced airports lockdown, Ethiopian airline ET911 arrives international wing of Abuja Airport from Addis Ababa. Federal Inland Revenue Service (FIRS) launches online portal for financial institutions in Nigeria. The naira appreciated marginally against the dollar at the I&E window on Friday. Nigerian stocks snap, losing streak to post solid gains in August. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Ethiopian airline ET911 this afternoon arrived in Nnamdi Azikiwe International Airport. The flight landed at the international wing of the airport at 1:36 p.m. from Addis Ababa, 5 months after the airport was locked down due to COVID-19. And still on international flights, the international wing of the Nnamdi Azikiwe Airport, Abuja, has suddenly woken up to a surge in passengers' traffic, day one of the reopening of the airport to international flight. Starting from the departure gates to the ticketing section, over 300 passengers are being processed to board Ethiopian Airlines scheduled to depart in a few hours. While waiting for the arrival of the first flight into Abuja Airport, passengers ready to depart for various destinations express their joy as the air has been opened to international flight. As part of its ongoing reforms to align the nation's tax system with global standards, the Federal Inland Revenue Service has launched a new automatic exchange of information common reporting standard system for the use of financial institutions in the country. Executive Chairman FIRS Mohammed Nami announced the deployment of the AEOI CRS notice calling on reporting financial institutions under the Income Tax Common Reporting Standard Regulations 2019 to enroll on the portal. NAMI says the Automatic Exchange of Information Common Reporting Standard System portal is currently live, open and active. Consequently, the FIRS is inviting all reporting financial institutions to enroll. The federal government says 5 million Nigerians will benefit from a domestic solar energy initiative that will be rolled out in the next 12 months. Vice President Yemi Osinbajo, who stated this while declaring open a 2-day ministerial performance review retreat in Abuja, said the solar initiative will support homes and businesses as well as provide jobs for more than 250,000 Nigerians. The retreat, being organized by the Office of the Secretary to the Governments of the Federation, will review the performance of each cabinet minister with a view to consolidating on efficient delivery of government programs and policies.
Because of the problems with the privatization exercise, government had to keep supporting the largely privatized electricity industry. So far, to keep the industry going, we have spent close to 1.7 trillion naira, especially by way of supplementing tariff shortfalls. We simply do not have the resources at this point to continue in this way, and it will be grossly irresponsible to borrow to subsidize generation and distribution, which are both privatized. But we also have a duty to ensure that the large majority of our people who cannot afford to pay cost-effective tariffs are protected from increases. NERC, the industry regulator, therefore approved that tariff adjustments had to be made, but only on the basis of guaranteed improvement in service.
Increasing electricity tariff has always been a contentious issue in Nigeria, especially as the nation is yet to enjoy the luxury of 24 hours of uninterrupted power supply. This is why the latest electricity tariff increase from about 30 naira to 62 naira for 1 kilowatt unit of energy per hour, as approved by the Nigerian Electricity Regulatory Commission (NEC), is already generating so much hue and cry as to the rationale for the increase. Well, among those who should know more about these developments is Dr. Mahmudu Abubakar. He is Senior Manager, Strategy and Compliance, Kano State Electricity Distribution Company, PLC. Thanks for being here, Dr. Abubakar.
Thank you.
What, in your opinion, is the rationale and justification for the recent electricity tariff increase?
Increase in electricity tariff is actually due to the unsustainable nature of funding the electricity market. The federal government has spent over 1.7 trillion in the last 5-6 years, and this is having a serious toll on the the revenue stream of the government, considering the paucity of resources. It has become evidently unsustainable. So over time, tariffs that are being charged in the industry are below cost-reflective tariff. What I mean by cost-reflective tariff is actually the cost of generating electricity and getting it to the end user is actually way above what is generated from the market. That is the collections that are made from the sales of electricity across the value chain. So over time, it has become unsustainable. And looking at the fact that it is a kind of a private-driven industry, the generation and distribution segment of the market have been privatized. So there are basically so many competing needs that are competing for the meager resources of government. So this is basically why government feel this is not sustainable, and the market should actually fund the full cost of generating and delivering electricity supply to the end users.
Dig deep into the generation and distribution, particularly to the end user receiving, being at the end receiver. Can you explain what the hike entails and what will be the value of, say, 2,000 naira worth of electricity at the moment, and how long will it take an average family?
It is very important we note at this point that there are 11 distribution companies, privatized distribution companies. And each and every of these distribution companies have their franchise area. And depending on the proximity to the generating plants and the distance of wheeling, as well as the customer population and the kind of composition of the customers. These are some of the basic determinants that actually makes the rates that are charged by different discos to differ. So, but on an average, I think there is an increase of about 50% on an average across all customer classes. Mind you, we have industrial customers, we have residential and commercial. So in this new tariff regime, we have lumped all the customers into three major categories. We have the non-MDs, which comprise of the residential customers, the commercial customers, that's the shops and small businesses. Then we have small and medium industries, and that's the big industrial customers. And we have 5 broad bands. We have bands A, B, C, and E. And what differentiates these bands is actually the number of hours. As you all know, this regime is a contract-based regime. It is based on the quality and number of hours of supply that is delivered to you that will determine what you pay. So if you are on band A, you are guaranteed a minimum of 20 hours. And if you are on band B, you are guaranteed a minimum of 16 hours. You are expected to have between 16 to 20 hours. Band D is expected to get between 12 to 16 hours. Band D will get between 8 to 12. And the least is those on band E who are expected to get a minimum of 4 hours. So on the basis of this, the tariffs that are charged on all these customers in different clusters of the franchise area of these distribution companies will differ depending on the number of hours you receive, as well as the distance of the disco from the source of generation. As we all know, majority of our generating plants are in the southern part of the country. So this account basically why the rate of southern discos is way much lower than those discos that are in the up north like Kano and Yola. Another thing is actually the loss level. You know, in the tariff calculation, you consider the customer population as well as the composition of the customers. You know, up north you have a lot of rural customers who are subsidized in this tariff setting process. They are not impacted by this increment in tariff. They are the poor and vulnerable. They will still be charged 4 naira. So, but all other customers that are on other bands, with the exception of those that are that are on Lifeline, will be charged at least 31 naira, 28 kobo. So if you are taking it from where we were, some customers are paid, are charged average of 25 naira to 31 naira. So that's the least increment. And some of the residential customers that are in the non-ND category will pay as high as 15 naira, average of 15 naira per kilowatt hour. So, but if you
Getting to hear this from you now, before such hikes are implemented, is there no room for discussions with particularly consumers, some level of enlightenment before this is implemented to carry them along?
This is not the first time that tariffs are reviewed in the Nigerian electricity supply industry. It is since privatization, I think this is about the 5th time that attempts were made to kind of make the tariffs cost reflective. So usually the process is there is a notice for tariff increment, and it is usually followed by public consultation. But unfortunately, this tariff increase, the new tariff regime, which is called service reflective tariff, is actually supposed to come into effect 1st July 2020. But due to the impact of COVID-19, we have started the public consultation following the COVID-19 protocols. We held several webinars to enlighten our customers and consult with them. As you all know, the tariffs are supposed to be fair to customers and enough to recover the minimum cost of generation and distribution and transmission as well. So usually we consult.
Hike is coming at a time the economy is biting hard. It's not a Nigerian thing, it's a global thing. Don't you think this will bite hard on the common man? In as much as the tariffs vary.
We believe the investors as well as the government is very, very mindful of the impact of COVID-19 and the economic situation. But the truth of the matter is that there is never, a time that things will be accepted as being the right time to do the right thing, you understand. But the most important thing is for us to understand that this tariff review or making the tariffs cost reflective is actually a necessary and sufficient condition to ensure that electricity is supplied at a very appreciable voltage profile, you understand, to enable businesses. As we all know, electricity is a kind of enabler. It actually enables small businesses to strive. And all the problem we are foreseeing as the economy is biting hard, if we can get a guaranteed and stable supply, I think most of this will be a thing of the past, because there are a lot of people that are out of businesses because of lack of electricity supply. And the only thing that will make this supply stable and reliable is when you charge a cost-reflective tariff. So the operators will have no excuse but to deliver, on their mandates to supply electricity when.
Okay, thank you, Dr. Abubakar. Well, there is this issue, briefly, there is this issue of lack of confidence, this issue of trust between consumers and the discourse. And there is also an issue that is yet to be resolved, talking about estimated billing. Where are we on this, and what are you doing to build the confidence of consumers, particularly at this time of the hike?
You see, the problem is that we don't want to play the blame cards, basically, because if you look at it critically, you find out that virtually every party in this industry has some portion of the blame. If you are looking at the customers, there is serious lack of sincerity on the part of customers. There is equally that sense of dissatisfaction from the operators. Likewise, the government. When you agree that you are going to, approve cost-reflective tariffs, and just few months down the line you call it off, then it brings about, lack of confidence. The investors' confidence will be eroded, you understand, and this is a problem that we've been battling with for the past 6-7 years of privatization. But the issue of estimated billing, I think we have come to a crossroad, and very soon it's going to be a thing of the past. As we are aware, NAC has actually rolled out, an order on capping of estimated billing.
Thank you very much, Dr. Mahmuda Abubakar, for sharing your thoughts on the recent hike in electricity tariff. Thank you.
Thank you so much, Bani.
Thank you.
Yeah.
Welcome. Moving on, the market capitalization of the National Association of Securities Dealers over the counter gained 2.25 billion naira week on week, ending September 4th, 2020, with a total market capitalization worth 524.64 billion naira. This represents a 0.43% increase compared to the previous week's 522.39 billion naira. The increase was a result of positive movement in price as the economy strives to recover from the pandemic. In the month of August, equities welcomed the release of Nigeria's Q2 2020 GDP data, which captured the full impact of the lockdown on economic activities induced by the pandemic. Let's now take a look at how the market ended Friday.
The NSE All Share Index for the week ended 4th September 2020 appreciated by 1.17% to close the week at 25,605.64 basis points, while market capitalization stood at 13.3 trillion naira. At a turnover of 2.2 billion shares valued 10.9 million naira in 18,013 deals were traded by investors on the floor of the exchange. All other indices finished higher, with the exception of NSE ASM index, which depreciated by 1.63%. The construction real estate industry led the activity chart with 954.5 million shares valued at 681.3 million naira traded in 218 deals, followed by the financial services industry with 889.8 million shares. The third place was the conglomerate industry with a turnover of 209.4 million shares worth 579.9 million naira in 677 deals. The top three equities were UACN Property Development Company PLC, Zenith Bank PLC, and Lasaco Assurance PLC. They jointly accounted for 1.2 billion shares worth 3.2 billion naira in 2,148 deals, a total of 126,119 units of exchange traded products (ETPs) valued at 655.9 million naira were traded in 36 deals, as well as 1,016 units of federal government bonds valued at 1 million naira in 8 deals. The summary of price changes recorded 41 equities appreciated in price, 19 equities depreciated in price, while 103 equities remained unchanged.
Trading resumed this morning with stocks failing to maintain steam. The all-share index at the close of the day's session logged a marginal loss of 0.09% to end at 25,582.25 points. Equity capitalization ended the day at 13.345 trillion naira. 254 million shares valued at 2 billion naira exchanged hands in 4,699 deals. The financial services sector led the activity chart and was topped by UBA, Zenith Bank and Access Bank. In the meantime, European stocks advanced on Monday, diverging from the U.S. after a rough week for markets. Up next is the Global Market Report with Boseriebo.
Global market fluctuates as the world strives to contain the coronavirus pandemic. In early trading of 7th September, European stocks were higher as investors monitored progress on various coronavirus vaccines, with the market looking to recover from consecutive losses driven by the tech sector at the end of last week. Asian markets were mixed as investors reacted to rising tech tensions between Washington and Beijing. Shanghai Composite down 1.87% to 3,292.59. Hang Seng Index closed 0.43% lower at 24,589.65 and Nikkei 0.5% lower at 23,089.95. Yet to update its new figures as at the time of this report, the U.S. stocks closed lower for a second day on Friday, 4th September, after a wild session in which names that could benefit from the economic reopening tried to offset another steep decline in tech. The Dow Jones Industrial Average closed 159.42 points lower at 28,133.31. The S&P 500 slid 0.81% to 3,426.96, and Nasdaq Composite also fell 1.27% to 11,313.13, but also closed well above its low of the day. Africa's stocks opened mixed, with Ghana's GSE Composite, Namibia's overall index, and South Africa's JSE Africa Top 40 posting gains.
The US dollar rallied higher in Monday's trading session. This uptick was on positive signs that the world's largest economy was recovering, as seen by the recent US jobs report released. This is where we end this episode of the program. Don't forget you can access this and all previous episodes on YouTube, and you can also communicate with us on Twitter, and the handle is @NTA News Now. The hashtag is #BizX. We value your feedback. Do join us again on Tuesday by 9:30 a.m. for another package. I am Benny Adams saying stay safe.